Welcome to the show. Do you know that the income tax is a form-driven administrative process? More to the point, do you know that IRS forms never state their true legal purpose on the form? Do you think that's just an oopsie? It's not. The reason the IRS doesn't state the legal purpose of its forms is, if they did, you wouldn't sign them. I'm going to prove that to you right now and provide a whiteboard layout to make it so simple to grasp. The Dr. Reality Vodcast with Dave Champion. Let's start with this. I'm the author of Income Tax Shattering the Myths, the best-selling book in America that provides mountains of irrefutable proof that Congress has never imposed the income tax on ordinary, hardworking Americans. Because I know what the law says, I haven't filed or paid a penny of income tax in 31 years. Today, I'm going to share some of that irrefutable proof with you. To make it simple for folks who may have never been exposed to the subject matter before, today, I'm going to stick to a single aspect of tax law. That aspect is signing a Form W-9. Many of you own your own business or have at some point in time and are familiar with those who owe you payment for your products or services, asking you to furnish a Form W-9. Before we jump in, I want to let you know that what you're going to see today is a microcosm of the larger truth of the income tax. Why am I sharing a microcosm rather than giving you the whole enchilada? The reason for that is twofold. First, instead of this presentation being 20 or 30 minutes long, it would be more like 15 or 20 hours long. Secondly, by keeping it streamlined today, you'll not only leave this presentation with a complete understanding of what is presented, but you'll likely retain what you learned for the rest of your life. Like any adventure into an area of law with which you may not be familiar, we need to take a moment to familiarize you with a couple of legal terms, what they mean, so that when you hear them as we proceed, your understanding will be crystal clear. The first legal fact you need to have under your belt is, what is a W-9? Of course, the W-9 is a form, but what kind of form? How has Congress and the Secretary of the Treasury classified the W-9? Think of it this way. If we were talking about family vehicles, we'd place them in categories such as coupes, sedans, crossovers, SUVs, and pickups. Similarly, the IRS places its forms within categories. The category into which Congress and the Secretary of the Treasury have placed the Form W-9 is called a withholding certificate. Withholding a certificate is defined in two separate regulations. One is short and to the point. The other is longer because it contains a lot of verbiage that is superfluous to our investigation today. The short version is found at 26 CFR 1.1471-1B148 and reads as follows. The term withholding certificate means a Form W-8, Form W-9, or any other certificate that under the code or regulation certifies or establishes the Chapter 4 status of a payee or beneficial owner. The long definition is found at 26 CFR 1.1441-1C16. I'm going to cut out the superfluous wording. The superfluous wording doesn't alter the remaining words in any way. Since you have the citation, you can read the full version for yourself if inclined. This definition of withholding certificate reads as follows. The term withholding certificate means a Form W-8, a Form 8233, a Form W-9, or any other certificate that under the code or regulation certifies or establishes the status blah, blah, blah. You may have noticed that both definitions mention the purpose of a withholding certificate is to, quote, establish the status of the person receiving the payment. Accordingly, the next part of our investigation is to determine what these regulations mean when they say the purpose of a withholding certificate is to establish the payee's status. That's easily accomplished because the opening paragraph of 26 CFR 1.1441-1 explains exactly that. It reads, quote, This section provides rules for withholding under sections 1441, 1442, and 1443 when a payment is made to a foreign person. This section provides definitions of terms used in Chapter 3 of the Internal Revenue Code and regulations thereunder. It prescribes procedures to determine whether an amount must be withheld under Chapter 3 of the Code and documentation that a withholding agent may rely upon to determine the status of a payee or a beneficial owner as a U.S. person or a foreign person, and other relevant characteristics of the payee that may affect a withholding agent's obligation to withhold. Close quote. What that paragraph tells us is that determining a payee's status is a relevant aspect to a withholding agent's obligation to withhold. So far, so good. But from whom is a withholding agent obligated to withhold? We can ascertain that by looking at the definition of withholding agent. Withholding agent is defined in several locations in the statutes and regulations. The wording varies a bit, but the meaning is the same. Let's start with the general definition section for the entire tax code, which is found at 26 U.S.C. 7701. 7701A16 defines withholding agent as, quote, the term withholding agent means any person required to deduct and withhold any tax under the provisions of Section 1441, 1442, 1443, or 1461. Seems clear, but to have a functional understanding of that definition, we need to know what sections 1441, 2, 3, and 1461 address. The first three sections are within subtitle A and is entitled Non-Resident Aliens and Foreign Corporations. 1441 is entitled Withholding of Tax on Non-Resident Aliens. 1442 is entitled Withholding of Tax on Foreign Corporations, and 1443 is entitled Foreign Tax-Exempt Organizations. Section 1461 is within the next subchapter, which is named Application of Withholding Provisions, and 1461 is entitled Liability for Withheld Tax. I encourage you to read these sections for yourself, but what they tell us is that 1441 through 1443 deal exclusively with foreigners, and the fourth section informs us that if a person is required to withhold income tax from the U.S. source income belonging to a foreign person, thus being a withholding agent, the withholding agent becomes liable to the United States government for the amount withheld. Again, pretty simple stuff. Another definition of withholding agent is found at 26 CFR 1.1441-7A and reads, for the purpose of Chapter 3 of the Internal Revenue Code and the regulations under such chapter, the term withholding agent means any person, U.S. or foreign, that has the control, receipt, custody, disposal, or payment of any item of income of a foreign person subject to withholding. The key point in that definition is that withholding agent has possession or control of income, quote, of a foreign person. For the sake of being thorough, what does subject to withholding mean? 26 CFR 1.1471-1 informs us that subject to withholding means the withholding required by Chapters 3 and or 4 of the Code. Chapter 3 is entitled Withholding of Tax on Non-Resident Aliens and Foreign Corporations, and Chapter 4 of the Code is entitled Taxes to Enforce Reporting on Certain Foreign Accounts. In other words, a withholding agent has absolutely nothing to do with ordinary Americans earning their own domestic source income. Rather, a withholding agent is a person who, in certain circumstances, is required to withhold the tax from U.S. source income belonging to a foreign person. I presume you noticed the circular nature of how the statutes and regs address these subjects. You have to go from one section to another, and then another, and so on, in order to finally understand what the law really means. We started with something as simple as into which category has the Form W-9 been placed. But then, because of the circular nature of the statutes and regulations, if we wanted to have a full understanding of why it matters that a W-9 is a withholding certificate, we had to learn what is meant by status, which then required us to understand what a withholding agent is. You may now better understand why I refer to it as the income tax scam. Based on what you just experienced, it may not surprise you when I say we're still not done, because you still don't have all the information you need to make proper sense of the W-9 issue. You may recall that when we were reading the opening paragraph of 26 CFR 1.1441-1, it informed us that status means whether the payee, meaning the person receiving the payment, is a foreign person or a U.S. person. That status determination is important because if the payee is a foreign person, the withholding agent has one particular legal duty. If the payee is a U.S. person, then the withholding agent has a different legal duty. With that said, it is important to remember that the only thing that defines a withholding agent is having, quote, control, receipt, custody, disposal, or payment of any item of income of a foreign person. In other words, whether the person to whom the payment is made is a foreign person or a U.S. person, the income being paid belongs to a foreign person. At this point, perhaps we should know who is a U.S. person. It's likely not who you think. But before we jump into that, please take a moment to subscribe to the channel and like the presentation so the algorithms will show it to more people. Also, please take the time to repost this presentation everywhere so our fellow citizens can discover the truth. Thank you. So, who is this guy called a U.S. person? The definition of U.S. person appears at 26 U.S.C. 7701A30 and reads, the term United States person means a citizen or resident of the United States, a domestic partnership, or a domestic corporation. But here's the thing. U.S. person is used in many different areas of U.S. law, and in each area of law, the definition is contextual. Let's take classified document law. When U.S. person is used in the context of classified documents law, it differentiates Americans who may or may not have certain duties concerning classified documents from foreigners who may be receiving classified documents. Clearly, U.S. person has a different contextual application concerning classified documents than it does for income tax. How about technology transfers? A U.S. person has a very different legal obligation under the laws that prohibit the transfer of certain technologies to foreign nations than does U.S. person in tax matters or laws pertaining to classified documents. So then, what does it mean to be a U.S. person in tax law? Here's the answer. Congress placed the term U.S. person into tax law in 1962. In the more than 6 decades since the term was introduced, in every statute, every regulation in which it appears, there has been only one contextual meaning. Every time U.S. person appears in a statute or regulation, it is addressing U.S. source income moving from its U.S. origin point to its foreign owner. Phrased another way, every time U.S. person appears in a statute or regulation, it is in context of a U.S. citizen, resident, partnership, or corporation being in the pipeline that's moving U.S. source income from its origin point to its foreign owner. This brings us to the whiteboard portion that illustrates how Form W-9 is used in the pipeline of U.S. source income from its origin to its foreign owner. A couple of things to keep in mind as you see the visual representation of how it works. First, keep in mind that 26 CFR 1.1441-1C19, which is the definition of payor, says that a payor, quote, generally includes a withholding agent. In other words, in the vast majority of cases, a person who is a payor is also a withholding agent. You'll understand that better in a minute. Second, Treasury Decision 8881 tells us, quote, with respect to any single item of income, each person that handles the payment is a withholding agent. In other words, anyone who touches the U.S. source income as it moves through the pipeline to its foreign owner is viewed by the Treasury Department as a withholding agent. What Treasury is saying is if you touch U.S. source income flowing to its foreign owner, then the IRS can hold you responsible for the U.S. income tax required to be withheld. More pointedly, if there are, as an example, 3 parties in the pipeline that had the legal authority to withhold, but none did, the IRS can randomly choose any one of them from which to demand the unpaid tax because they all knew the withholding was mandatory, yet each withholding agent left the withholding to the other guy. Both of these will become more clear when you look at the whiteboard. A quick note about the whiteboard segment. It may look and sound different from this first part because I'll be experimenting with a different camera and microphone. If you're inclined to give me your feedback on how the whiteboard segment looks and sounds, leave me a message down in the comments. With all of that under your belts, on to the whiteboard presentation. All right, here's the whiteboard. First of all, I want to apologize. I have like zero drawing skills. So yes, I know it looks very childish, but that's not my forte. So let's talk about this a little bit. First of all, up at the top, we've got U.S. person. We've talked about that. You should have an idea what that is. Withholding agent. We've talked about that. You should have an idea of what this is. So what are these three boxes? We've got foreign person, in other words, somebody outside the United States. We have a U.S. investment firm, and here we have the U.S. origin, the place from which the U.S. source income is originating. So here's the scenario. This guy, let's say he's a Peruvian billionaire. So what he does is he contracts with a U.S. investment firm. He sends them several $100 million and he says, I want you to invest this in U.S. corporations that pay dividends. So the investment firm then, following his instructions, goes ahead and invests. We're going to call this Apple, okay, the computer company. So the investment firm, amongst many investments of the Peruvian gentleman's money, invests in Apple. So Apple is the U.S. origin. So Apple pays dividends. So these dividends go from Apple to the investment firm. Now, Apple has no idea who actually owes the dividends, right? But the investment firm does know who the owner is of those dividends. So Apple is sending it to a U.S. person. Now, Apple doesn't know, because we know that U.S. person is somebody who is involved in the flow of U.S. income, U.S. source income from its origin to its foreign person, right? However, there's a dynamic going on. I'm going to do another video on this where I'm going to buttress this with more information. The way the tax system works today is the government presumes everybody who's receiving income is a foreigner, and then you have to prove you're not a foreigner. So how upside down and backwards is that? Nevertheless, when Apple pays this to the investment firm, Apple is going to demand that the investment firm provide Apple with a W-9 stating to Apple that the investment firm is a U.S. person and is therefore involved in the flow of U.S. source income to its foreign person. So now the investment firm is under instructions from the Peruvian gentleman to send the dividends to his bank in Peru. So now the investment firm has to send, oh, wait a second. There's an issue here. That issue is the investment firm, remember the section we were talking about where it says a payor, okay? So Apple is a payor in terms of the investment firm. The investment firm is the payor in terms of getting the money to the foreign person. And you remember we talked about where the regulations said that a payor is generally a withholding agent, okay? We also talked about on a single payment that anyone who touches the money is a withholding agent. So because the dividends belong to the foreign person, Apple is a withholding agent and a payor, okay? The investment firm is the payor and the withholding agent. Now, in this case, we have just two domestic corporations. One of these two has to withhold. So in this scenario, excuse me, the investment firm is going to withhold. The withholding is going to take place right here before the money goes offshore to its foreign owner. That is a simplistic version of how these things work. So again, to be clear, Apple is the payor and the withholding agent. Remember, payor is generally a withholding agent because he's touching the payment. Apple is touching the payment. He's a withholding agent. The investment firm is a payor and a withholding agent. The withholding is done here. And so that makes the investment firm liable to the United States government for the amount of U.S. income tax withheld, and then the balance is paid to the foreign person. Now, I want to be clear on something so that you understand thoroughly. If Apple somehow, miraculously, was aware that that dividend payment belonged to a Peruvian gentleman, a non-resident alien or foreign corporation, Apple could withhold here. So right here, before the money went to the investment firm, Apple could withhold. And if Apple were to withhold there, it would alleviate the investment firm of having to fill out a W-9. It would alleviate the investment firm of the requirement to withhold because the withholding had already been done. Make sense? Now, let's take this a little further. Let's get rid of all this jazz right here. All right, let's look at this a little different way. Let's say we had so now, the Peruvian gentleman, when he wants to invest his hundreds of millions of dollars in U.S. corporations, he does not send that money directly to an investment firm in the U.S. He sends it to a U.S. law firm with instructions on what he wants done. Then the U.S. law firm sends the money. They contract with the investment firm to invest the money. And again, for this scenario, it goes to Apple. So in this scenario, Apple remains the origin. Now we have the investment firm. Then we have the law firm. Then we have the foreign person. So as the dividends are paid out from Apple to the investment firm, then the investment firm pays the money to the law firm. Then the law firm pays the money out to the foreign person. So in each of these circumstances, Apple is the payor. They are also the withholding agent. The investment firm is a U.S. person, a payor, and a withholding agent. The law firm is a U.S. person and a withholding agent and a payor. Now, again, for the sake of illustration, Apple could do the withholding, alleviating the burden on these two. Apple could not do it. The investment firm could do it, alleviating the burden on the law firm. Now, typically, these entities aren't going to do it. They're going to leave it to what I call the last domestic guy with it. So in this scenario, the last domestic guy with it is the law firm. So the law firm then, it receives that dividends that belong to the foreign person, and it's going to conduct the withholding right there, which makes the law firm liable to the United States government to file a return and pay over the U.S. income tax owed by the foreign person. So the law firm withholds, we'll call it 30% for the sake of simplicity. That varies based on tax treaties and other factors. The law firm withholds 30% of the U.S. source income and then pays the balance of 70% to the foreign person. So, again, U.S. person are the first three. Withholding agent is the first three. Payor is the first three. They all fill the bill. They're all payors. They're all U.S. persons. The only thing, and they're all withholding agents, the only thing that differentiates is the burden that they might be under. So, for instance, if Apple were to do the withholding right here, the investment firm would not have to furnish a W-9. The law firm would not have to furnish a W-9 because although they are in the pipeline of U.S. source income flowing to the foreign person, the withholding has already been done. So that then their status tracking the W-9 generates a 1099, right? And the 1099 is used so that the United States government can quite correctly track the money to this moment when somebody, whether it's this, or this, somebody is required to withhold the U.S. income tax. The W-9, which then results in 1099s, are meant to allow the government to do this tracking to determine who, if I can get this to work rightly, who actually did the withholding and when. Okay, so if it is, as I say, traditionally the last domestic guy with it, the W-9 1099 cycle, Apple identifies to the government that the next person in the pipeline was the investment firm. The investment firm demands a W-9 from the law firm and issues a 1099, which the government can track showing here. And so this is the last domestic guy with it. So then the government can hold this guy, the law firm, accountable now, by the way, let's say this withholding doesn't happen. Let's say the law firm does not withhold and sends 100% of the foreign person. The law firm now becomes responsible, becomes liable to the United States government for the amount of U.S. source income tax it was required by law to deduct and withhold and pay over to the government, and it failed to do so. And under U.S. tax law, the law firm now becomes liable to the United States government for the amount that it was required, mandatory language, required to withhold and did not. I hope I said that all clearly. I hope that visual illustration clarifies the correct use of Form W-9, as well as the role of U.S. persons and withholding agents and why the W-9 is needed to establish one's status, as discussed in the regulations we looked at earlier. Now that you know who is to use a Form W-9 and why, let's confirm your new understanding by looking at the instructions on the form. On page 2 of the instructions, we find this: use Form W-9 only if you are a U.S. person. Now that you know what a U.S. person is, how can you sign a W-9? In order to establish status, the W-9 must be signed under penalty of perjury. Knowing what you know now, would you not be committing perjury to sign it? At some point, as you mull over this presentation, you might think to yourself, I now understand the proper role of the Form W-9, and I know it has nothing to do with me. So what form do I use when conducting my business with others? Good question. And of course, the only place to get that answer would be the tax code. So what form or forms do the income tax laws of the United States require a person to use, sign, furnish, or file concerning his or her domestic income earned within the 50 states of the Union? Do you have a pen handy to write this down? Good. So that you may have an accurate and complete list, write this down. Write the letter Z, followed by the letter E, then R, then O. That spells zero, which is the number of forms U.S. income tax law requires a U.S. citizen or resident to use when earning his or her own domestic income within a state of the Union. In all of U.S. income tax law, a U.S. citizen earning his or her own domestic income within a state of the Union is not required to file any income tax forms. None, zip, nada, because the tax isn't imposed on you. I'm now going to say something that may shock you. The information you heard today is just a fraction of the hard-hitting, indisputable, 100% conclusive evidence you'll find in Income Tax Shattering the Myths, showing that Congress has never imposed the income tax on ordinary, hardworking Americans like you. You can get Income Tax Shattering the Myths at drreality.news, drreality.news. While you're there, have a look at body science. If you want the same kind of evidence-based breakdown as you've seen today, but focused on how your body's physiology really works, rather than the false establishment narrative the American people have been fed for 60 years, while you're purchasing Income Tax Shattering the Myths, also grab a copy of Body Science. You may have noticed that the health of the American people is in free fall. 70% of our population is overweight or obese. Diseases like diabetes and Alzheimer's are exploding. Obesity in children, which was almost unknown a few decades ago, is now commonplace. Due to trillion-dollar industries pouring money into bogus research, fake science is everywhere these days. Corrupt studies are making absurd claims, such as that things like salt or red meat cause type 2 diabetes. Due primarily to the lies of government and certain industries, America's health is in the shitter and getting worse every day. Body Science shows you that process, shows you their disinformation. What will likely shock you is that almost everything you now believe about health and physiology is not factual, but it's not your fault. You've been lied to for 60 years about virtually every aspect of human physiology. That disinformation has led the people of the wealthiest and most technologically advanced nation on earth to be the sickest people in human history, and getting sicker every day. The good news is, all you need do to see what they've done and get turned around is read Body Science. If you read Body Science and put into action what you find there, you will leave the ranks of the misled and sick and become incredibly healthy. As you might imagine, I practice what I preach. I haven't filed an income tax return or paid a penny of income tax in 31 years. I also adhere to everything in body science, and at 64, I'm as healthy as I was in my 20s. Body Science has never gotten anything less than a 5-star review, and readers rave about the fact that they look and feel decades younger after putting into action what they learned in Body Science. And finally, I wrote a 13-page handbook entitled Business Handbook for Forms W-9, 1099, and U.S. Person to help business owners explain the legal reality of W-9 to those who may request a W-9 from you. Knowing the truth doesn't necessarily prepare you to present the facts in a cogent manner to someone with whom you're conducting business. You can give the W-9 handbook to the requester, and it explains the facts in a way perhaps you cannot. So go to drreality.news, drreality.news, and pick up a copy of Income Tax Shattering the Myths, Body Science, and the W-9 Handbook. They will be the most fascinating books you have ever read. You have my word on that. Also, by purchasing Income Tax Shattering the Myths, Body Science, and the W-9 Handbook, you help me to continue to be here for you with these revealing and thought-provoking presentations. Please share this presentation so that others can learn the truth, and thank you for being here. Take care.